and we'll move on, guys. We'll move on. Um, yeah, but thank you guys for being here. We got I shared the link also to the Telegram. Just invite people over since this weekend is the last day to have access to the to our legacy group. Um, and yeah, let's go. Let's go. As always, right? These calls are for educational purposes only. Any trade idea or suggestion is pure speculation. So always trade responsibly, know how to manage your account, but most importantly, right, do not trade any money you cannot afford to lose. Share. Let me hide the video panel so you have full access. And all right, guys. So here I'm gonna show you guys the perfect setup, right, for the SMT indicator. And you know, oh, just look at that price fly, guys. Okay, you so the structure, momentum, timing, right? Remember, this is derived from the Ichimoku cloud, right? This is basically instead of an Ichimoku cloud, is the Ichimoku boxes, right? Instead of a cloud, we have a frame, and these two boxes in the front represent the uh the cloud, the span A and span B. Okay, so if you're familiar with the cloud, you're familiar with those terms. Our cloud technically is the small and the medium box, but the cloud does not have a frame, does not have a structure frame, and therefore is that structure frame right there. It's meant to be used mainly in the 5 minute time frame. It works with all pairs. Gold has I have the best read on it on gold, but it works with all pairs. Okay, and the perfect scenario is this, guys. The perfect scenario is bullish structure, bullish momentum, entry at the 52 mid, stop loss at the low of the 52 mid, and take it up to some extensions. Okay. Let me find you guys the setup where it worked beautifully. Like it worked to the T. And that I didn't take the trade, but I was so happy that that happened because it just gives me more confirmation, guys, to really analyze this. All right. So check this out here. All right. And I'm gonna explain to you guys how to use this green line. Okay. But you guys already have access to it. But I'm explaining to you how it works. All right. So here, right, the big box is always reading the last 17 hours. Okay. The big box is always reading the last 17 hours. Okay. As we get a new candlestick, the box shifts forward and so forth, and it drops off on the back. The things that you guys have to know how to read, right? Is okay. The structure, okay. Structure is bullish, and it's pretty obvious as well, right? Because the thing is blue, or my color, I choose blue for bullish. If you want to read the structure in there, you can as well, and we do have N wave structure. Okay. Now we do have to understand the terms buy low, sell high. Okay. So, or fair value price, right? The most simplest way to understand fair value, right, is 50%, correct? 50% is fair value. Would you guys fair value? Would you guys agree with that? 50%. Yes, Joe. The structure is based on the lowest low inside the box and the highest high. Yes. Yes. Okay. But yeah, fair value is about 50%. So ideally, guys, right, we want price to come back to about 50%. You buy from that price level, and then your stop loss technically is at the low. Okay. And I have some extensions up here that you can actually take price to. So that's just using one box alone. Okay. Just using the big frame alone if you really want to go that route. Alrighty. If you just want to use, because again, each box is basically the same thing, just on a different scale, right? The small box, it's its own box, but on a 17 scale. The medium box, it's its own box, but on a 52 scale. And obviously the big one is the big box is the big box on a 204 or 17-hour scale. Okay. So let's just use what we just learned here and put that to the test. Okay. Go ahead and just hide some of these things. All right. Perfect. So there's a really faint line there of 50%, but we'll buy from there, stop loss there, and take profit to the extension. Remember, we first want to get confidence on movement. If we start criticizing this setup because it's 130 pips, we're not going to get anywhere. Okay. Let's focus on the pattern and find consistency on it. Okay. So price drops. Don't worry about the other boxes right now. Gets to 50%. And then eventually the box will shift here. That was the original setup. Just ignore everything else right now. And there it is, guys. Okay, there it is. The box shifted a lot. There was a lot of movement in between. But from where we got the entry from, it only went about 20 pips in drawdown. And it gave us 230 pips in profit. Right? That was a heck of a trade. Heck of a trade. Or just heck of movement. So that's like the most basic thing that we can learn. All right, so now let's kind of include momentum in there. Let's see how the momentum plays out. We want to buy when there's bullish momentum. When we're too high, when we're above the 23 percentile, it's not the best to buy, right? Because we're buying too high. We kind of want to wait for a fair value price. Okay. So now let's study that momentum. And see how price looks when it first touches that area right there. Perfect. All right. So now we have structure bullish. Momentum is bearish. Why is the momentum bearish, guys? Remember, if this was the cloud, come on, cloud, turn on. If this was the cloud, the Ichimoku cloud, we have a bearish cloud, right? A cloud twist to the downside. Yes. You see the cloud? Bearish cloud. But specifically, this is bearish because the midpoint, the 17 mid, is below the 52 mid. Everybody got that? That's the reason why the momentum is bearish. Why is this green line green? Because the 52 mid is above the 204 mid. Okay. It's a little faint line. I have it there on purpose because I just don't want it. I don't want to see too many lines. It just kind of like confuses me sometimes. Everybody follow along so far? We've been joking around to keep it fun, right? But the momentum, it's mom, right? That's the, how does it, Nico? Is it acronym, Nico? What to call it? It's not an acronym, right? It's a abbreviation, right?
Saying
The
it's
same thing?
it's a cliche or like a saying that mother knows best. It actually used to
Oh,
be the name of a TV show. Mom
yeah.
knows best.
Oh, not the specific show, Dan. I was talking about like the acronym or the initials, right? The initials of it. But yeah, we'll get to that for sure.
Yeah,
But yeah,
but
mom.
mom, I don't know if it's an actual acronym, but momentum, it's just the
Yeah.
abbreviation.
It actually it is the momentum on trading. Yep. It
Right.
is the momentum for trading, but in real life it's not. In real life is something else. But yeah, abbreviation. There you go. Abbreviation. That is the
Abbreviation.
abbreviation.
That's what we were looking for. Okay, cool.
So this is equals momentum. Okay. Momentum. And again, right, this is just to keep it fun. The green line, that's dad. Okay. The green line is dad, right? The green line is saying buys. Mom and dad or parents are having a discussion, right? In this scenario, mom's saying, all right, I want to go this way. Dad says, no, I'm still bullish. Okay. Conversation happens, etc. More candlesticks, Bernie, flow, right? It gets to the 50 percentile. And then price does that. Remember, the boxes are always shifting. And there he goes. Mom's finally saying, okay, I agree with you. Okay. Momentum turned bullish. You enter at the 50% of the mid, 52 mid, and then you take it to at least the next high or the extension. All right, guys. And then from there, yeah, I know what happened. Okay. Again, a lot of stuff is happening in the mix of things. But that right there, guys, is a perfect setup and a perfect movement on momentum, on a perfect movement on momentum. How it reestablishes right there. Alex says markups are good. My nerve, not much. Yeah, and that's the next. That's Bernie. Sorry, Bernie. I thought Alex said. And again, yeah, again, Bernie. That's where like it's just about getting confidence and just seeing it over and over and over again. That you definitely. All right, I see. I've seen it so many times. I'm looking at the same thing so many times that then your brain's like, all right, I give up. Let me just get in and go for it. Right? Let me just get in and go for it. But that right there, guys, this was a perfect setup right there. A perfect movement of how momentum was down first, reestablished itself bullish, and then boom, up it went. Now, here's another perfect scenario on how the momentum, although structure is king, the momentum can control a day. I think on Wednesday, right, I wanted to buy from a lower area because was it Wednesday? No, I think it was here. It was no, it was Tuesday. It was Tuesday. Oh no, I think it was Monday. Yes, it was Monday. Okay. Around London time, everything was bearish. Let's kind of take us to 7 o'clock, 8 o'clock, give or take. Yes, we were right here. Perfect. This is exactly, guys, at 8 o'clock Central Time. Okay. 8 o'clock Central Time. Should have been this. Could be wrong. Okay. Yes, it was this one. All right. So here in this scenario, the structure was bearish, but momentum was bullish, right? And this is where I don't think it was this Monday. That does not look familiar. I remember the markup. I think it was Tuesday then. Hold on. That's not the example that I want to show you guys. There isn't a specific example that I wanted to show you guys.
It could have been this one if you put it right here. I think we were looking to come back to
What was the day when not Alex, Jeff shared something about, and then that's the day that I said momentum. I think it was a Monday or Tuesday. I can't remember on the chat.
Yeah, it
But
had to be
this is
after. It had to be after Monday because it was after. I think we
uh,
were looking for price to come back to these levels down here.
okay.
I think it could have been this like crazy fair value gap that was created here.
Let me just go to 8 o'clock.
I can't remember, but it just never came back to that. It just never came back to that fair value gap and just kept going up.
Yeah, it's probably it. You're right, Dan. Yeah, because we're looking at 33.60. Yes, that's probably
Yep.
it right there.
Hmm.
That's still 8 o'clock. That's 9. Um, must have been. No, you know what? I think it was Wednesday because I'll tell you guys what this green line is. You probably gotta know what it is, but
Yeah, I was gonna say, did you pop that on for confirmation?
no, but I'm gonna show you guys here in a second. Right there, yeah, right there. This is it right here, guys. It was Wednesday because I think we were live trading together on Wednesday. Yeah, 8 o'clock, 4 o'clock. Beautiful, right there. Okay, this is Wednesday, August 27th, and the structure was bearish, right? Structure was bearish, and I was looking for sales somewhere around here. And a perfect example here of where momentum can control the day. 8:30 in the morning, we get this big drop. Okay. Structure is bearish. We did come back to about the 50% and started getting a reaction from there. Okay. The best confirmation, guys, is when we gotta let the momentum really shift. In that day, I thought that this was enough, right? And I was just kind of anticipating the shift down and the momentum never, like again, see how low we got below here? But the momentum said no. Mom said no. Even though the 52 mid was red because it's below there, just sometimes momentum can take over. And it took over, it did. Okay. It took over right there. And that's another great move, example, excuse me, on how the momentum is really, really important. We do take structure into consideration. We got the 23 percentile lines to kind of guide us, but the momentum will shift. Okay. Momentum will take price to the in the direction it wants to go. Yes, Bernie. That's what we say, right? Structure is king, but momentum can control the day, and mom knows best. I think that's what we've been saying there. Something along those lines. And momentum on the 5 minute chart on gold, especially during the NYSC, that happens a lot. Good, Joe. We'll get to that one next. That is an important question. Okay. So in this scenario, like today, guys, today I was actually looking for buys lower. Let's just say today I was looking for buys at this green line, more specifically, like down here. That's where I wanted to buy from. Okay. That's exactly what I want to buy from. We had these nice structure points, low, high, higher low, higher high. Okay. You fib that at 78 percentile, right? Good setup based on technical analysis. Buying low, buying at a discount price, etc. Okay. And the momentum at that time was bearish. And this was my buy zone down here. Like, all right, I like it. The extensions are all the way down here. Perfect. Okay. Perfect. Now here goes some advanced things about timing. okay, and how you can see the future of the box system. We got the structure down in general. Okay. 52 mid is bearish. Momentum is bearish, correct? Our entry should have been at the 52 mid, stop loss at the high of the 52 mid, right? And take profit back there or to the extension. Great setup visually to take it, right? Great setup. Okay. But let's look at the future. The 204 box, right? The big box is got only about 23 bars left before it expires, right? Remember, this is kind of like a red light, green light, yellow light type of thing. Okay. And it's anytime that's below 52 bars, it'll give you a caution that it's gonna shift. It's not gonna be there forever. The box is gonna shift. So as we move forward, hold on, get ahead of me. Perfect. Okay. Now it's got about 17 bars left, about an hour and 25 minutes left. Okay. So this future is about to expire, correct? Where is the next high that has more establishment? Either that little wick or that little wick. So the future box, technically, what would you say, Dan? This arrow is good right here? This one right there?
Yeah, either one of those 2 points are almost identical.
Okay, so we'll just keep this one. So
Yeah.
the future 204 box is that high. And there we go. So why is this important? Because we can glance into the future what the potential midpoint is going to be at. You see that, guys?
Mhm.
Does anybody have any questions there? I want to make sure that you should be able to unmute yourselves.
No,
Anybody have
I
any
also want
questions or
to
comments
add
there?
that, yeah, I also want to make sure put your black extension lines on because this is what I notice is key. Are these 23% lines? And notice the 52 where the 52 midpoint is during this next bunch of movements. It never goes below. I don't think it ever went below the lower
Okay,
23% line.
correct. Correct.
And that to me says, there's a good reason why it says put on the brakes.
Prachi, I'm trying to see. We don't see the low, right, when the box is shifting. Talking about like the low down here in this scenario, Prachi. If that's the case, if it's a structure down, it's only going to give you one time on top. If it's up, it'll go down. And hopefully that's what you mean. Yeah, because it was just a coding thing that will allow us to read it better for the timing better. Yeah, you're a good observation too, Dan. That 52 mid, if it's slightly above there, it's momentum can take over. Okay. But yeah, this is the future box. And it's still red, right? Because the 52 mid is below that. All right, let's add a few more candlesticks. Uh-oh. Momentum is bullish now. Mom is saying, I want to buy. Take me shopping. Take me shopping. Like, all right. Before we push the button to buy, we at least want to let price hit the 23%. Okay. Guys, I did attempt a sell in this area because I saw a 15-minute drop base drop. I didn't share that signal with you guys because I was just gonna put the first entry there. But the moment I saw the momentum shift bullish, like I am not gonna argue with you. I am not gonna argue with momentum, right? Let me just close my trade and regroup. And I did close my trade and regroup. And I ended up getting the buy. Okay. So let's see what happens next here. So now,
Oh, before we
go
go
ahead.
on, G, point out the nice rally-based rally that formed that took us above that zone.
Mm-hmm.
And that was perfect, and we're looking for at least to come back to that level to keep going higher.
Perfect. Yes, sir. Now here's the thing, guys. This analysis is making sense, etc., but it doesn't have a purpose if we don't have a destination.
Right.
You got to have a destination in front of you. How high can it go? And I use those directions based on the average movement, right? That price likes to do. Because if you don't have that, it's just we're just kind of like just reading just the chart and okay, it makes sense. But no, the whole thing is how can we enter? How can we capitalize? If I buy now, where's the stop loss go? How much range do they have left? And so forth to really, to really take the next move. Alrighty. So again, that's why this exists and so forth. So here, guys, bullish momentum now. We touched the 20, that top 23 percentile. Now that's interesting, right? Why? Because technically this high is higher than that high, correct? Right?
So now that arrow, the lowest point is going to be that red arrow is going to be shifted over to this high.
Correct. At this time, correct. Right there.
Mm-hmm.
Perfect. Nice. Good job, Bernie. Okay. Like, okay. So then again, though, right? So now in the future box, if that's the higher, if this is the future 204 box. So technically now, guys, this is a bullish box. In the future, approximately 45, not 45 minutes, but a little bit more time. This box will be future bullish whenever we get to that low, give or take. So that was telling me right there that okay, I think the buy is going to come, and it's also touching the rally based rally that Dan mentioned, right? More candles come up, and then the box goes even higher. Like okay, we're definitely going to be a bullish scenario. What time is this now? 8:30. And then once we got that close above there on this time frame, I wanted a 15-minute close, but it didn't happen. Once we got that engulfing candlestick, that was it, guys. During the live session, I said this is it. You can put your stop loss at the low here, or whatever. At the engulfing candlestick. Right now, this is gonna be a bullish future, bullish everything. Now, granted, right, we're not entering based on the 52 mid rules and so forth, because when momentum takes over, it just takes over. This is where our candlestick game, our candlestick analysis with ETM candlesticks needs to kind of come into play, right? Momentum is saying bullish. Structure is going to be shifting soon to the top side. I don't think we're going to get a pullback. Let's just use that candlestick, or let's just use that candlestick to enter. Okay. And then from there, up it went. Okay. And then hit that extension. 33.39 is what we had called. Okay. So great examples there. Joe, when all signs are bullish like now and price above the 23%, what do we look for entry? Well, the story repeats itself, Joe, right? The story repeats itself. We made the higher high. Ideally, we want price. Structure is bullish. Momentum is bullish. We want price to at least touch the 52 mid. Right now, the 52 mid, in my opinion, is too overstretched because it's the same size as the 204 box, right? So I would personally allow some time to lapse forward so the 52 mid can start trending. And then from there, we look for entry. Okay. And then from there, we look for entry. for us to take. Anything that I missed, Dan?
Can you explain that again? I don't understand what you meant when you
Which
saying
which part specifically?
the box is too stretched.
Hmm,
Like you see structure bullish, momentum bullish,
Ah,
and you're saying now that you're gonna wait because the 52 box is too stretched.
absolutely. Dan, you want to take a shot of that, and I'll come back and follow
yeah,
you.
exactly.
Thank you
I
for that question,
so
Deanna.
when we get this impulse, notice the midpoint of the 52 box and of the 204 box are almost identical. That means if you ever seen one of those, uh, like a slingshot, you
Okay.
pull the band back, and all of a sudden you get the maximum tension,
Yeah.
and then you release it, and all the momentum of the bullet keeps going, or the rock keeps going. So in order for this to keep going any higher, we need to at least
Oh,
release some tension, I'd say somewhere in this point, to continue going higher. Is that about where you're heading for that, G?
Oh, man, that's the yeah. Whatever. I knew you were going to do a good job explaining of that, but
so
yeah,
so
go.
you saying that the 52 box needs to move up like not equal lows with the 204 box?
Correct.
Exactly. So what's going to happen after it hits this green tab, that little green thing, the 52 box will shift up and will be above the 52 the midpoint of the 204 box.
I'm glad when you said that, Deanna. Say again, we all see things slightly different. Yes, the 52 box and the 204 box,
Mm-hmm.
they share equal lows and equal highs.
Okay.
That's the reason why their midpoint is at the same level. And
Okay.
that cannot be the case. They all have different times. They all have different, they're all different, right? So
Right.
they cannot be the same. So whenever that happens, going back to Dan's example, right? That the medium rubber band is stretched as far as the large rubber band, and usually we get a pause, right, or we get a pullback. It won't. It's so much tension that price cannot trend until the 52 no longer shares the same lows as the 204 box.
Is there a particular space difference that you would be okay with? Like, I mean, a little bit above, way above, or you can't?
Well, I just not the same though. Not a good observation there. Let me explain this because this is another concept I think is important. So see the 52 box, right? This low of the 204 box has 13 hours, right? 159 bars from there all the way they left. That's
Mhm.
not going to go nowhere, correct?
Correct.
However, look at the 52 box. It's only from here to there. So one, two, three, four, five, six, seven, eight, about nine, let's call it 10 candlesticks, right? 10 candlesticks from that green line to the edge of the 52.
Oh,
So in 10 candlesticks or 50 minutes, this low is going to start shifting up, shifting up, shifting up, and therefore that tension is released, right?
okay.
That tension is released. All right. So
So
that's
one
that.
more
Go for it.
question.
Go for it. Please go ahead.
So are you looking for price to retrace back down to like the 50% of the either the 52 box or the 17 box first?
Ideally, the perfect setup is we want to enter at the 52 box. That's the perfect setup. So we
Okay.
let some time go by, we let that box shrink a little bit, establish itself, and
Okay.
then we use that 52 midline for entry.
Oh,
Yes,
thank you.
my
So
pleasure.
you don't use the 23%, the upper 23% as a entry level, then you would want a deeper pullback.
I
Ideally, Joe, yes, but
personally,
go for it, Joe.
yeah, I personally like the 23, especially if it doesn't close below. remember on the way up, we never saw the midpoint of the 52 go below the 23. We're going to be looking for the same example to happen at the top side. So if it wants to go higher, we're not going to get too much deeper than we won't see that shift of the 52 of the 52 box above that line.
Yeah. One more
That's
thing that I want to answer, Dan and Joe. So see, it doesn't mean that we're going to get a pullback to here, right?
Oh,
It doesn't mean that we're going to come back over here because this box will shift up a little bit, right? So if price kind of just stalls there, right? In time, maybe an hour from now, maybe 2 hours from now in general, these midpoint lines are also going to shift up. You
okay.
see? And when that shift happens, that's basically those are the momentum lines. Those are the midpoint lines are the momentum lines that can take price pushing up. So Joe, right now, it's not a good idea to enter up the 23% because the momentum hasn't caught up. But if the momentum catches up and the structure is still bullish and the momentum is still bullish, those midlines, then we could potentially use the entry above 23%. But once the small box and the medium box kind of line up to give us that push.
right. And in fact, in a minute, 51 seconds, we'll see that shift in the 17 box right away,
Yes, yes.
which is interesting.
Yep,
Yeah.
absolutely. And then another thing to take into consideration, guys, of maybe not using the system anymore is simply because if you put this on here, pips moved. They'll turn that on right there. We already moved 358 pips. We already reached that first target when we're technically slightly overbought on the air. If you turn on the range notes, I have a range, mathematical range. Let me make this a little bit bigger for you guys and give you guys a better color. Come on. There it is. So see the current range from low to high is 358 pips.
Mm-hmm.
That's the current range. This number that I have here in the middle, that's a mathematical number calculation that, on average, we get to 358 or 425. What are those ranges? Well, those ranges are this blue line and this red line. So the blue line is technically 358 and the red line is 425. Right?
Mm-hmm.
It did not touch it. It missed it by like a pip. But if it actually touches it, it will give you three warnings, right? It'll give you three warnings. It'll give you good range, continue it, or it'll say like caution, you're overextended, or it'll say we're definitely overextended. Don't too volatile.
So the
you
red
good?
and blue lines are based on pip count, not fib extensions. Did I
Correct.
understand you correctly? Okay.
Correct. It's an extension based on the box, Joe.
Okay.
On the structure box. Yes. But they're
Well,
not
what's
but they're not
interesting, G, yeah, we're actually looking at a fib based on momentum instead of the actual Fibonacci itself.
true. Yeah, that's the way to put it, Dan. Yep.
Oh, cool. It's an interesting way to look at it. Yeah.
Yeah. This is not extensions, Joe, on the fib. It's just extensions based on the range of the box. Okay, of the box.
But you can actually trade the way you're explaining it right now without actually putting all these fibs on.
Mm-hmm. Yeah, you sure
Exactly.
can.
Each candlestick, each high and each open and close of a candlestick can become an entry level.
Mm-hmm. Good example there, Deanna. Good explanation there. You can literally, right? And on that one, Nico, just click on the indicator. And pips move right here. Pip status and range notes. If you turn these off, you're not gonna break anything. You'll just turn off those things. But yes, yeah, yes, great observation there. Excellent observation there. Okay. No drawings, no fibs, nothing.
Awesome.
Check this out right here. Okay. Maybe you have two entry rules. I'll enter at 50% of the 204, or I'll enter at the 52 mid. Okay. Let me go ahead and at least turn off the notes. This is too much for me. Okay. So you enter at the 52 mid, at the 204 mid, buy limit, stop loss at the low, take profit right there. I have zero drawings in there. The only drawing that I have is the little pip to reward tool.
And the 52 mid, is that like a real like can't hardly see line or
The 52 mid is the green line, or
oh
green or red.
the
So you
50,
put your entry at the 204 midpoint.
Yeah, this was a 204 mid.
right? I'm
Okay.
talking about the 204 mid. I'm sorry.
Yeah,
That
that
little
one you can
line, right?
barely see it. Yeah.
Okay.
I think I made it a little too faint, right? I'm probably gonna darken it up just a little bit. I do have it over here just a little bit darker. Let me see if I have it. Yeah, I already have that ready because sometimes it's a little, it is a little bit too mid, too faint for me. Is it? Yeah,
Better.
one second. I just don't want to. If I'm gonna do another update soon, I want to make sure that I, include enough updates, right? And that there you go. See, I made it just a little bit
Okay.
more solid
There you
right
go.
there. Okay. And yeah, you can enter buy limit from there, stop loss at the low, take profit at the range. There's not an extension, it's a range. Okay. What did you say earlier, Dan? That was interesting. I like the wording that you used.
About the which one?
The extensions, the levels.
Oh, yeah, the extensions of momentum instead of the extension. But if you put a fib on it right now on that particular box, and if you get to the 618, add the negative 618 to that fib.
Very close.
Yep.
Yeah.
Yeah, so you can even go to the negative 382 would probably be pretty close to that. Anyway,
Good,
yeah,
good. Yeah. The only issue with the fib here, guys, is right that if we make a higher high, right, um, the box is bigger, and therefore, right, you would have to realign your fib, right? But these don't move. These do not move at all. Those
that's
stay.
why I was looking at it as the momentum, the
Yep.
fib of the momentum.
Yeah, those
Or
lines
the
will not
fib of
shift.
the boxes, yeah.
Those
Okay.
lo-
Another question. So you put it at the 50% of the 204 box. Do you have a preference to do that opposed to the 52 box?
You put a buy stop there at the 52 midpoint and catch it on the way up.
mhm.
Too.
So remember, the entry at the 204 box,
Mm,
that's your buy low structure entry,
okay.
right? That's your fair value price. That's
Okay.
your fair value price. Right now, we did get below the 52 mid, so obviously it's not the best, right? But look at that, guys. But see, look, it gave us another opportunity right there, Dan. It's a very good example here, guys. Look, the more I start seeing it, the better and better it gets. All right, first entry was a 204 mid. Okay,
Okay.
we'll put it right here. 204 mid, which is the same thing as fair value price, right? Fair value price. You hit play, buyers step in, everything's bullish now. And let's say we did miss that fair value price entry. Well, if price can come back and touch the 52 mid, we can
Okay.
enter from there, stop loss at the low of the 52 mid box, same extension. Okay, let's see what happens. Comes back, just barely misses it. And there it goes.
Wow.
TP hit. TP it.
So there, even though it came back to the 23 fib, you were using the 52 mid as the entry.
Correct that.
Because-
Becoming
yeah.
correct, Joe. Yes.
Or you could have had both.
But the same thing, very near, Joe. You see, break and retest of the 23%. The 52 mid is behaving like support to push price back up. So that's a good confirmation right there.
So it's safer than the 23 fib.
Correct.
Yeah.
And it's more for consistency too, right? More for consistency. I'm going to only use the 52 mid for entries, right? Just to kind of keep something consistent. And there it is, guys.
And that's what I was saying. You could have put the 52 mid on the way up, make it a buy stop,
Mm-hmm.
which would have worked just as well. Because this way, if you somehow walk away and forget to set it before you go, you at least caught the trade and you're in it and win it, and bada bing, bada boom.
Mm-hmm. Now, price is still pushing up a little bit, guys, right? But again, though, right, that's
But it
not
had a
the,
nice pause though, which
yeah,
is cool.
it
It
did.
pausing long enough right in this area where we just have how many minutes left? Not even maybe an hour
Mm-hmm.
before it shifts to the upside.
And if I put on my notes in dark,
Oh,
now because we actually touched that blue line, caution, reach target one, momentum may slow, wait for reversal conditions to complete. So it can
awesome.
continue up, but it's not the best, right? It's not the best setup to continue.
But you should get out right there. Or
That's if you bought, get out. Yes, yes. This system is
Basically, that's your
offensively and
TP1 anyway.
defensively.
That'd be our TP1. We get a pause and it continues to go up. This will be TP2.
Absolutely. And then let these boxes shift a little bit. So you look for that technical
awesome.
entry. Yep.
Awesome.
Yep. It's a good system, guys. It's a very good system. It's about 80% accurate in direction. And the more eyes we see on the momentum, the better, right? The better.
That's my next question I was going to ask. How accurate, like, how, I guess 80%.
Yeah, I mean, again, like trade for trade, like actual entry, actual entry, I'm not giving that, right? I'm giving the 80% probability of it's gonna go up, right? Or it's gonna go down. Because
Right.
if you enter late, you're still at least in the direction of the wave.
So how does news affects this system?
It'll affect it. It'll just it's either going to play to the T of what momentum is saying or just kind of shift the other way. And the last two times that I back tested those heavy news, momentum ruled the day.
Okay.
Mm-hmm. Is there a way we can have a deeper pullback? Alvaro, it's all depending on the momentum, to be honest. And this Wednesday's price action is a prime example of that. Right? A lot of times, right, we're waiting to buy lower for whatever reason, right? You see these fair value gaps over here and so forth. Like, I'm gonna buy low from down here, right? Well, let's see what momentum says. Well, momentum said, I'm ready to go. Mom says I'm ready. Let's go, right? And momentum shifted the entire structure box into the top side. What would be considered a complete pullback? And Nico, yeah, good question there. So basically, two things. Price this low needs to kind of fall off. And once it falls off, price will reestablish itself in pips. Or I believe I have it coded to where, like, if it's near the 50%, it'll say I'm ready. One of those two things. Yeah, one of those two things. But other than that, guys, let me see.
But I like the fact that it says that it's a caution letting us know it may not be a good time to enter for another buy, and we will be looking for a reversal.
Mhm.
Now that we've hit this extension up here, the top side, we got to again relieve some pressure in the overall structure of the market to continue higher.
Absolutely.
So,
Maybe this go for it, Deanna.
so I guess my question is, because I've been following you for a minute, and you pretty much every day we go through the weekly, the fib, and all of this. Why, if this is just like, yo, boom.
I guess I'm a control freak, maybe. I don't know. I'm just kidding.
Oh, no. The reason was I know because when G-Money was, yeah, when G and I are working together, the fib is important for two reasons. One, it's an accurate measure, and two, we didn't know.
Okay.
Yeah,
He just made this the 223 lines are new.
yeah.
They only added that recently,
Oh, okay.
and even the midpoint. And so what we have to do is you can always go back and back test, which probably hasn't been back tested far enough at these points to say what our accuracy will be.
No, but
However,
Dana, to Deanna's point, I think in the future, guys, once we have access to the SMT indicator. Once we start seeing it more and more and more and more, right? It's going to be to the point where we just need to be on the 5 minute chart, and that's all we need, right? I think it's really there because remember, this indicator it's
That would be grand.
this indicator
That would be
officially
awesome.
launched this year, and they had like already like 4 updates already, right?
right.
And now it's to the point to where like, okay, it's working exactly how I want it, right?
Mhm.
And
Right.
we're gonna just see it so much, so much, so much. Like, oh shoot, all we need is this time frame, and that's it.
Real. That's
Yeah, because there's a lot of moving parts right
It
now,
is.
but if you, like you said, you can get it down where it's consistent and you just got
Oh,
one
this,
focus,
yeah,
man, that'll be grand.
Mhm.
yeah. And I've noticed even for myself that I'm never looking at other time frames.
Yeah, there
ever.
you go. That was a good example of it the other day. He's only look at the 5 minute chart, and yeah, the bigger time frame allows me to kind of get a better visual. But in the future, it's gonna be like we just teach this 5 minute system, go with momentum, and and stuff like that. So it's coming, Diana. It's coming. The wave is
yo, it seems like,
mom is
yeah,
starting to talk.
I love
Are
mama.
you are you a mother, Diana?
No, unfortunately, I'm
Okay, I was about to say, mom is
to
starting to
others.
talk.
But
I can loan you a kid.
you were saying something about that green line that I don't really see when I pull up that SMT.
Yeah, that's actually what I'm going to right now, guys. And I'm gonna wrap it up with this here because we're about the hour mark. Respect you guys' time. So I'm on the 1 hour chart right now, right, guys? I'm on the
Okay.
1 hour chart. The system works the same, obviously, it just takes long. Okay. Structure is bullish, momentum is bullish, the timing is still healthy. We'll put a buy limit at there, right?
Mm,
Stop loss can be at the furthest down, or you can
okay.
take it to the next. Actually, no, where's the stop loss at the 52 mid? The 52 mid stop loss is there, right? So we're going to enter at the mid of the 52 box on the hour time frame. Here, unfortunately, I don't have the extensions, right? Because the extensions are only for the intraday time frame. But, this is kind of where we probably would put a fib on this. And then we can take it up to the extensions right there.
So we
Okay.
just draw
That,
a
or you
line
can
there.
take a level from price and add
Oh.
300
Like
pip
this,
to
Dan?
move. Yep, measure. Yep.
Okay, perfect. What were you saying, Deanna?
No, I, I don't know what I was saying. Would you just draw that line at the 272? Because you said as the box move, it shifts and then you have to recalibrate your fib. So I'm trying to figure out,
Yeah.
oh, got a line at the top.
Yep. That's a good example right there. Yep. Right there. Yeah, you can put that right there. So you won't have to
Right.
worry about the box shifting anymore. Okay.
Okay.
There it is. Or like what Dan said at a structural high. Okay. And so here it goes. It plays out. Touch the 52 mid. Come on now. It just missed it technically. It just missed it, to be honest.
There you go.
It looks like it touched it here because the candle popped up, but regardless, right? It worked.
Boom.
right there.
It's both.
Oh man, there it is. So if the 52 mid is the 52 mid is strong on the 5 minute, and the 52 mid is strong on the 1 hour, right? The ETM indicator, guys, that we have. Remember the ETM, the candles indicator?
Mhm.
Before the boxes were born, we used to use the Oracle lines. Okay.
Mhm.
And the Oracle on the 15-minute time frame, the Oracle on the 15-minute time frame is the 52 midpoint on the 1 hour time frame, guys. So when we go back to the 5 minute chart, this line does not change. This line's still reading the 52-minute data. And technically, guys, that line, the Oracle, is the 52 mid from the 1 hour time frame, just showing on this time frame here.
Oh,
And so long story short, we're more bullish when we're above the green line. So if that line is green,
mm.
it's more bullish because the
Does it
1 hour
turn
moment.
colors?
Say it again.
Oh, I guess it does. Turns red.
Yeah, turn red. It'll turn red as well. It'll turn red.
So if it's green, it's pretty much going buying.
Correct.
So I don't see that on mine. It needs an update.
Go to the ETM candles indicator.
Oh, ETM. Okay.
Put your
Okay.
settings on,
Okay.
and then show your Oracle reloaded to 15-minute.
Okay. Do I have to put that?
What do you have on yours right now?
I have no idea. Let me see.
I think it's already programmed a
It's the
certain way.
default. It's the default of the indicator.
it should be the
The
default.
custom visibility time frames, you can change those.
Yeah, I
It's
would
not
say
560?
one more time.
It's not at 560 on the time frame by default.
What does it say for you?
I don't have mine up.
Okay, that's fine. That's fine. So, yeah, so Oracle reloaded, turn it on, make sure it's in 15-minute. And I only use it on the 5. I will just show you as an example that I had on there to compare. I only use it on the 5. That's all I use it for. But you can use it on whatever time frame you want, and just keep in there.
Mhm.
And I think if you read these little notes here, if you wanted to show on all time frames, just type in
Okay.
chart.
Oh,
Where did it go? Did I erase it by accident? I sure did. I think, yeah, you just type in chart. And then you can see this line on all time frames. But it gets a little mushed in there, with a higher time frame. So I like just to keep it on the 5 minute. But that green line, guys, that green line right there is the 52 mid. Okay, that green line is the 52 mid on the 1 hour from the 1 hour scale. And what is gold doing? Pumping up. Look at that.
it's green.
Mhm.
And it's not paying attention to what our normal
Mhm.
rules are. It created
Correct.
another, although it did create
It's going
pause.
to the other extension.
It
At least
created
the
the
extension,
pause
yep.
right there. Gee, it created a
Mhm.
break a structure candlestick that pushed it higher.
Yep. But again, guys, we'll close out with this. It's like we never would have to really worry about missing the trade, because we're always going to have opportunity, and I think that brings a lot of peace of mind to the analysis. Deanna, today you're asking a lot of questions. That's good because you're seeing something that allows you to ask those questions, right?
Yes.
And that carry on the lesson. So I do appreciate that. But yeah, guys, good session. This is recorded, and I will upload to the YouTube that we have, and you can rewatch it again for those rules.
So I
If you
guess
guys want to take some notes on,
holiday.
Say it again.
I guess we better be careful now because of the holiday.
Yeah, you know what? It's a good observation too. So it's Friday, the last day of the month. Monday, it's Labor Day. Markets will be closed. USA banks will be closed. Excuse me. A little bit slow. Might as well just let it reset. Let the trade reset. Let the trade reset.
That's one of my rules for why I don't trade on Mondays.
Yeah, there you go.
That's my day off.
Oh, really?
Yep.
I mean, I know it's slow. It is slow because
It
it's
could be a
real
news days, but yeah.
Yeah.
But usually my Mondays are my days are catch up on life.
How about Fridays?
Yeah, with gold, we can trade in either direction. With gold, it's tradable. With gold, it's tradable. You just got to look for one move and you're down. You got to be really disciplined in entering, exiting, and taking profit. But yeah.
Thank you so much, G. I
Oh yeah,
appreciate
my
it.
pleasure, guys. My pleasure. And again, we appreciate everybody's time here. Have a great weekend. Anna, I don't know what time you got in here, but I'm gonna record this for you, and we'll see it on the chat. We did a good review on the SMT boxes. Go back and watch that one for the perfect setups. And again, the what's next is putting it in print. I do want to put it in print where we write down a screenshot and put some notes down there, and we're getting the data, we're getting the explanation for us to have that in print so you have it establish a good foundation on that explanation.
Well, then we'll see you on Sunday then, G.
Yeah, Sunday study group. Sunday study group 7:15, nice and early for those that can make it. Thank you guys. Have a good one. Bye.
Bye.